There's two things happening that are big. You've got the Fed on the one side and the trade stuff on the other. And the ink was barely dry on the Fed statement yesterday when that new tariff news came out on threatening new tariffs on China going from 10% to 25% on $200 billion of goods. Now, the Fed, what did it do? It upgraded its view of the economy from solid to strong and pointed the markets to a September rate hike and one likely in December. So here are the probabilities we have right now. September trading at an 88% probability. These are the Fed fund futures markets. 58% in December, 59% for that next quarter point or the first quarter point in 2019 in June. What the Fed did not mention in this statement, any concern about global trade tensions and the potential negative effects for the U.S. economy. But those Fed probabilities are actually off just a bit in the wake of the announcement of the new tariff threats, a threat that made Goldman Sachs say this last night, quote, "We continue to believe that additional tariffs on imports from China are likely to be imposed." What's important about that is when the first threats were made, a lot of the folks like Goldman said, we don't think there's really going to happen. And now there's this default position. We think stuff's really going to happen. Now, it's really difficult to game out the economic impact of these tariffs. Some warn they could reduce growth well in excess of the actual amount of trade affected. But what we do have is we have our estimates from our CNBC Fed survey. 59% say they decrease growth and 54% say they decrease jobs. And there are the numbers. Existing tariffs, a very small tenth of a point off GDP, but then it starts to ramp up on the threatened tariffs, which were at the 10% level when we asked the question. Now they're at the 25% level. So that's 0.4. And the question you want to ask is 0.4 off of what? And we don't know that.
And then the unknown effect is if businesses kind of pull in their horns a bit, if they get spooked by some of these issues, if they are not spending CapEx like we may have anticipated.
I think that's really important, Becky, because one of the X factors of the Trump economy has been this turnaround in animal spirits. And nobody has a feel for that. Keynes wrote about it, but there's no formula that says, X input plus Y tax cut equals Z.
But we've seen it. It's
animal spirits. We've
real.
seen it.
Yeah.
It's out there. The confidence numbers are high. And now we're starting to see in some of the survey data we look at, for example, the ISM manufacturing yesterday, even some of the consumer confidence data, some of the tariff stuff is starting to creep in. And it becomes a question of, the Trump administration has decided to play very high stakes poker with the whole world on this thing, and certainly with China. And maybe they get them to back down or get some kind of thing. You could have, by the way, a positive GDP effect from this. If you notice what happened in the second quarter.
People buy now before the tariffs get put on, or import now if you're a business.
What we call the magic bean, the soybean, influenced GDP in the second quarter. It could happen again in other ways as people get stuff in before the tariffs, the retaliatory tariffs.